Good afternoon, everybody. Today I'm chatting with Keith Neumeyer from First Majestic. In this interview, we discuss what's happening with institutional investor sentiment in precious metals, including how Stanley Druckenmiller recently purchased stock in two of the large gold producer names. We also get into the sentiment with silver and what might jolt us out of this trading pattern. We then get into First Majestic, where we discuss the company's recent 2024 production guidance. We also get into how cash costs and sustaining costs for some mining projects is now higher than the current spot price of silver and the tough decisions that companies make. And I also ask Keith what shareholders should be looking out for with the company in 2024. All right, everybody, enjoy the interview. Keith, thanks so much for joining us today.
Hey, Steve, it's been a while. I don't know exactly when it was, but I know it's been quite some time since we chatted last.
Yeah, I think it's probably been about a year since it was last you and I chatting. So the big talk this week, we got Stanley Druckenmiller. He's announced that he's sold off some of his tech names, and now he's added Newmont and Barrick. Barrick also recently announced a new share buyback program. Now, I know you're talking with a lot of institutional investors. First Majestic's obviously not a tiny micro cap. So you're having conversations with some pretty sophisticated investors that are kicking tires on the space, I imagine. What's the conversation like out there right now? Are you finding that there's a little bit more interest, or is it sort of just business as always?
I should have read that article a little bit more. I saw the headline, and I think it said NVIDIA is his largest holding, but I didn't go down and read it that he's actually getting into the gold names, which is really good news. So I travel a lot, as you probably know, and we just got back. Well, not just, but I guess it was in November. We did a European tour of a few different cities in Germany and Switzerland and in the UK, London. And it was interesting because there was a lot. I was not that optimistic, because the market is just so bad right now. The mining sector just seems to be completely unloved. And these conferences that we went to are just packed, and these are investors, a lot of family offices. And what really surprised me as well, not only just the numbers of people, but also the age of the people. That all of a sudden now we're seeing a bunch of young people coming to these conferences, which is quite unusual. I've been in this business for 35 years, and you normally see the same people, over and over again, traveling from one conference to another, and mostly they're retired individuals. They're big believers in gold and silver, and they're long for forever. They own your stock for over a decade, and it's not that unusual for me to run into somebody that owns First Majestic for 10 years. Or even longer. So, but now we're seeing these younger people coming into these conferences. They're not buying yet, but they're kicking the tires. So it's pretty encouraging.
So let's talk about the broader silver market. It's sort of been kind of stuck in a bit of a tight range there. We'll say in the low to mid 20s. What do you think has to happen at this point to move the price of silver higher?
Well, I ask that question of me almost every morning I wake up. So it just shocks the heck out of me. We got the U.S. House in the United States to actually mention silver as a potential metal to add to the strategic metal list. They published a strategic metal list last year. And surprisingly, silver was not on it. And I was quite shocked that we had our people here contact them and say, hey, look what's going on, because half the metals on that list I had never even heard of. The most random, way down in the periodic table, minute metals that are used in the craziest things that no one even knows what they're being used for. And yet silver, you can't, produce an electric car, you can't produce very much of anything, a computer or a cell phone, without silver. And it's a pretty important metal for going green and then changing the electrical grid around the world. So and it did wake them up. We've also just recently Also, just to that point, so the United States is going to publish their new strategic metal list in 2025. Canada is going to be producing their strategic metal list. They're telling us in May of 2024, and we're being told we had 20 senior executives of all the silver companies that you know of sign this quite long letter to the government a couple of months ago. We published it. It's actually on our website if people want to go look at it. And a lot of the names in the silver industry signed this letter. And the government is telling us that they're going to put silver on the strategic metal list. Now, what does it take to get silver moving? I don't get it, because, in 2023, we don't have the 2023 numbers yet. In 2022, the human race consumed 1.2 billion ounces of silver, and the mining sector only produced 850 million ounces. Now, it's a pretty darn big deficit. The expectations of consumption in 2023, which aren't published yet, are somewhere around 1.4 billion ounces. And the miners are still producing basically the same as they've been producing for the last 5 years, around the low 800 million ounce range. So these deficits are climbing, yet the price just doesn't want to move.
Do you think that there's an argument to be made, though, that when we look at some of the other commodities and how badly they've been beat up over the last, say, 12 to 24 months, that silver's actually kind of held in there quite nicely?
I don't know. When you have a deficit like that, I just, I don't know. I look at copper as an indicator, and copper is basically flat. Gold, of course, is hanging in there quite well. I think if you look at copper and gold, they've underperformed. Oil is, kind of got its now trading range is kind of, so I'm not sure exactly what commodities you're referring to, but the ones I watch have been, pretty flat, and silver's definitely underperformed, the three that I mentioned.
Mm-hmm. Yeah, I was more or less referring to some of the battery metals, like we've got sort of maybe your lithiums or your cobalts that have even nickel that have been sort of whacked down quite a bit, but a lot of those are much smaller markets.
Yeah, those are thin markets, and they were driven up by hedge funds that were following the green story. So it's I'm not sure if you can use that as correlation, but it is sentiment driven for sure. You mentioned those metals, and you get a bunch of hedge funds moving into a particular market, and they're going to drive anything. Look at AMC, look at Tesla, look at Apple or Microsoft, all the big names that we know of. They didn't move on fundamentals. They moved on sentiment. Whether it's AI sentiment or whatever you want to call it, all of a sudden all the mining has been going on for over a decade. So we've seen this major market move dramatically over the last several years, and the miners have just been left behind. I look at this market almost identically to year 2000. When we saw the NASDAQ bubble burst at 5,000 in March of 2000, and over the next 3 years, the NASDAQ dropped 80%. People don't, a lot of investors today, because they're, obviously, not as old as I am, they don't remember that because they weren't around at the time. They weren't investing at the time. But it took 15 years, and go back and look at this chart on the NASDAQ. It wasn't until 2015 that the NASDAQ actually hit 5,000 again. And during that period of time, the mining stocks exploded. Gold went from 250 to 1,800, silver went from $5 to $50, and then there was a light under the mining sector that lasted a decade. Then it all ended in 2011, 2012, and then the whole tech market lit up in 2013 through 2015 and started hitting new highs, and we've been ever since 2015, 2016 hitting new highs on the major markets ever since.
So something I'd love to ask you about, because I assume that you follow it somewhat closely, is the solar industry and the impact that has on silver prices. Is there any thing that you're watching right now, or any insights you can give us on what that sort of demand pipeline looks like and what impact that could have on the silver deficit?
Well, and that's what's driving the deficit. When I put the company together, back in 2002, electric cars and solar panels really didn't even exist, and for use for the most part, they're very early technologies. I put First Majestic together because I felt that it was such a required metal for technology, and I knew that the human race was going to continually to evolve and require more and more technology. I didn't know, of course, exactly what that was going to look like. But today, we have two industries: the solar panel industry and the electric car industry, consuming 30% of the world's supply of silver, which is pretty shocking. And yet, silver prices are more than half of what they were back in 2011. It's the only metal that I know that has, is at 40% of what it was trading at its peak in 2011.
So let's talk about First Majestic. In January, you guys issued some 2024 production guidance. What can you tell our audience?
Yeah, it's going to be very much of a flat year, 23, 24. When I say that, I mean from a production perspective. We ended the year off on a very positive note. Q4, the financials are coming out in the next week or so. Costs have come down nicely, and that's really the focus right now. We went through a pretty difficult inflationary period over the last couple of years, post COVID, and there's lots of stresses on the mining sector. And you look at I just was looking at Hecla's financials this morning, and I of course watch all these companies coming out with their financials, try to comparing us to the sector and so on. And we're performing very much the same as the entire sector, but with the less inflation that we're seeing towards the end of 2023, and we're expecting into 2024. We're also expecting a weaker peso with the elections coming up this year in Mexico. The peso's been quite strong as a result of oil, moving quite a lot higher, and then oil's now kind of range bound. And then with the elections, we think that's going to be negative for the peso, and a lot of our costs are in peso. So not only are we trying to drive our costs down through inputs such as chemical inputs, ammonia, cyanide, and so on, but also we're expecting the peso to go our way as well. So we may have a flat production year, which we'll see improvements in 2025, but in 2024 the focus is really to reduce costs.
So you guys have the La Encantada mine, which has seen cash costs and all-in sustaining costs now, as I understand it, is now above the current spot prices. Is there a discussion that goes on about maybe we should put this mine into care and maintenance until silver prices get better, or is that too cost prohibitive to do to actually even have that conversation? What's sort of the thought there?
Well, we had our management meeting just yesterday. We pay a lot of attention to this stuff. When you're producing ounces, at higher than spot, it always sets alarm bells off, and we have to look at, okay, what's causing that, and how do we change it? And in the case of La Encantada, that's been a solid asset in our portfolio since 2006. It's produced a lot of profits for us, and La Encantada, helped us build this business, and so we don't want to make too quick of a decision just based on history, but we require wells, and these for water, and obviously water is pretty required for milling or producing silver. And there's three large wells that have been supplying this mine for as long as we've owned it, and then much longer than that, probably 30 years. And in June of 2023, one of those wells collapsed, and it just imploded upon itself and shut off almost half the water that was going to the mill. So we didn't think it was going to be that big of an issue. We said, okay, fine, let's go drill another well. Well, it turned out to be an issue. We're now have drilled 3 holes. We're on a 4th hole right now, looking for additional water. We have improved. We've got some water, but we don't have the water that's equivalent to what we've had historically. So we're going to just keep drilling, and where we put some guidance out for 2024, which, we kind of had to do. So in our guidance, we're assuming that it's status quo. We're not going to discover any water, and we're going to have high costs for the entire year. I hope that's not the case. Based on just our meetings in the last couple of days, that we are having some successes. So we're crossing our fingers that we can get these costs back in line, normal course by mid-year. But we are projecting the worst on our guidance. But even at that, we're willing to keep running. It is a small producer in a whole scheme of things. We're producing 26 million ounces a year, and then that mine produces right now a couple million ounces. So at its at normal course, they'd be producing about 3 million to 3.5 million. So even at full production, it's still just 11-12% of our total production. So it doesn't really impact us as much as you may think. The number looks pretty rough when you look at the financials. You see this $25 an ounce cost, which shocks everyone. But from a financial perspective, it doesn't really cost us a lot.
Okay, so you also put out some exploration results from 3 separate properties. What's got you the most excited here?
Well, Jarrett Canyon is pretty important to us. We paid a lot of money for Jarrett, and my share price was much higher than it was today, and we issued paper. So I suppose on a positive note, those shares we issued, were 4 times the current share price. So I guess it was a good use of company's stock at the time. But nevertheless, the mine is not operating. So we do need reasonable results there to get that operation back up and running. And the theories our geos have are paying off. We have almost a $40 million exploration budget in 2024. We'll have over 20 rigs active throughout the year. And it's a big program. And of that 40 million, 10 million has been put into Jarrett Canyon. And we're hoping to find an elephant there. So there's a lot of focus on getting Jarrett Canyon back up and running again. But, Santa Elena is just a jewel. It's record production at Santa Elena. And we're expecting similar production in 2024 as it was in 2023. Great cost, huge cash flow producer. But from a geologic perspective, that's a big land package, and our guys are pretty excited about the continued exploration programs going on there.
Okay, Keith, last question for you. Let's talk about 2024. If I'm a shareholder, I'm watching the company, or I'm interested in the story and I want to evaluate how management's done or how the story is coming along, what am I looking for in 2024?
Well, Steve, as I said, it's all momentum, right? It's all sentiment. We could be doing a great job, and silver prices are down. Our stock is going to be down. We put out that exploration news release that you referred to, and there were some great numbers in there and some great successes in there. I thought it was a pretty good news release. We don't put out a lot of news releases on exploration because I don't think a lot of our shareholders really pay a lot of attention to our exploration programs. They're more interested in what we're producing and so on. But that's the stock should have been up that day, but because silver was down that day, the stock was actually down that day, which was pretty silly. But that's just the way it is. So we need the momentum to change. We need the sentiment for the mining sector to change. And when we have these big disasters like we saw in Turkey or what we saw in Panama, it really kind of makes the institutions think about whether they should be putting money into the mining sector. And then you got all these ESG issues out there and all the permitting issues that mining companies are having worldwide. And there's an attack on the mining industry right now, and it's global. And we're paying the price, and it's showing up, and shareholders are being hurt as a result of this attitude that is occurring worldwide. And it's not really us. It's not First Majestic. It's not any company. It's the entire industry is under attack. And it's tough for investors who believe in silver, believe in gold. I other than that, look, I live this business. I've been living with this business for a long time. I've never seen sentiment as bad as it is today. It's actually very, very shocking. So we need to see sentiment change. And once sentiment change, and what is it? How do you change sentiment? Apple drops by 50%, Microsoft drops by 50%, and all of a sudden people wake up and say, where should we put our money? And then what they did in 2001, 2002, and they started allocating capital to the mining sector, real assets. I'm expecting that's what's going to happen all over again. What happened in 2002, 2003, and we lit up the mining sector. We had a 10-year bull market. That's what I'm expecting. When that's going to start, I don't know. People are, your Tesla's rolling over. Some of these other, big high tech stocks are rolling over. So maybe we're seeing the beginning of a change. With the amount of people showing up at these conferences, which is encouraging. Maybe that'll also help change sentiment. But quite honestly, I don't think it really matters what we do. We need to get the sentiment out there. We need to get investors back into this industry, back investing in the mining sector. And First Majestic will outperform, as it always has. You look at our peer group, you pick the top 10 silver companies in the world and look at a 20-year stock chart on them, and you see how we perform compared to all of them. We always outperform. We're always usually in the top 1, 2, 3 of the entire sector when the sentiment changes, and I expect that'll be repeated again.
Okay, well, Keith, thanks for hopping on here. Our audience always loves when you hop on, and it's always gets a great reception. So thanks for doing this. And hopefully you'll come back on later in the year, and we can look at how everything's been going. And hopefully by then we're seeing more of a bit of a lift in some of these commodity prices and a little bit more excitement, because we can only go down this path for so long until something breaks, right?
Yeah, no, that's very true. And I'm the triple digit silver guy. It sounds kind of silly when we're trading at $22, but I still think we're going to see it. And I think we'll see, 3,000 on gold and, at least north of 50. And I think approaching $100 silver, but it's obviously not there today. Hopefully it's, at least on its way by the end of the year, because we're going into a perfect storm for the metals. You talk to all the analysts or listen to what's going on in the industry, and whether it's copper or silver or the battery metals, there's just been a lack of investment in all these critical minerals, and investors need to be looking and choosing, which companies they should be, investing in, because I think this entire industry is going to, explode higher. But it's just very difficult to stay long when you look at your screen every day and it's red.
Well, Keith, thanks so much for hopping on here, and best of luck for you guys in the coming quarters, and we'll definitely be watching.
Okay, well, let's get back on the phone in 6 or 8 months, and hopefully we got $30 silver.
Thanks, Keith.
Okay, great talking.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.